And welcome to a VSA video blog. It's myself, Andrew Monk, the Chief Executive of VSA Capital. I'm delighted today to have Nick Bridgen, the Chief Executive of Ferro Alloys, who have had some terrific news this week. Nick, how are you?
Oh, very well, thank you.
Well, you should be very well. I mean, you announced some amazing news on Monday where Vision Blue Resources, led by Mick Davis, has come in and taken a stake in Ferro Alloys. Do you want to just quickly give us the headline of what you announced?
Well, yes, he's come in. His company, it's a sort of multi-stage and multi-format investment. The complexity is really driven by the need to fit in with laws of Kazakhstan and stock exchange laws and things like that. But essentially, the investment is coming in as partly as shares and partly as loan notes. But the loan notes really are quasi-equity. They're not like a typical convertible that companies use to raise money. This is investment that is coming in that form so as to avoid two things: the need for a consent from the Kazakhstan government on the change of a subsoil user, change of ownership of the subsoil user. We will get that consent, and then they'll convert. And the other thing is to avoid triggering the requirement for prospectus. So in understanding the deal, forget the distinction between loan notes and equity. It really is an all-equity deal at heart.
And initially, they're saying 12.6 million, which is pretty good because that's actually a lot of money for where you're standing today. But actually, they have certain rights, don't they, to bring in actually potentially another sort of, I think it's 30 million at higher prices and milestones being met and certain offtake capabilities. So
that's right. Yes, it's structured as 3.1 million initially, then subject to getting the consents that I talked about. There's another 7 million that will come in. So that will take 2, 3, 4 months or something, that second stage. Then the third stage is an option, but I'm quite sure, looking at the share price, that it will be taken up. It was always planned to be taken up for an additional $2.5 million investment 2 months after we published the feasibility study. So that's all timed to meet our expenditure requirements up to the point where we'll be fully funded on the big project. The two options that you're talking about at higher prices are $10 million at 25 pence and an additional $20 million at 78 pence. So they're much higher. So the dilution, although those are quite big sums, the dilution involved at that point will be relatively minor. So altogether, think of it as a $12.5 million investment upfront or nearly upfront, and 10 and then 20 down the track, which will be timed to coincide with funding the main project. So actually, it's options are never good things to give away. You're always giving away a little bit of value, but on the other hand, it's timed to coincide with us having to raise equity anyway, and it's at these higher prices. So it will help to, I think, between our own earnings from this existing operation and those exercise of those options, that will fully take care of the equity that we will need to raise to fund the big project. The rest will come from debt and the usual.
Well, and I think that's quite key, isn't it? I mean, first of all, I think the 25p and the 78p price marks are quite important because that gives you an indication of perhaps where your stock price might be heading. But as you say, bringing in that additional 30, I think your main project to get fully funded needs about $100 million, but the other 70 would be debt. So you are effectively now fully funded to, in my view, build what will probably be certainly probably the cheapest producer of vanadium in the world, but one of the largest potentially, because the expansion ability in your project is huge. And presumably,
exactly,
that's what Mick Davis saw. He sees here a world-class mine in vanadium, and it's well known that his vehicle, Vision Blue, wants to get involved in battery metals, and vanadium is becoming more and more important. I mean, is that how it all started, or were there some other interesting angles that appealed to him?
Fundamentally that. I mean, this is a dream project. It's, as we said, the anticipated capex for phase 1 of the main project, ignoring for the moment our little operation that we do today, is tiny, $100 million. Typically, mining projects are in the billions. and often you have 200 or 300 million of infrastructure requirements. And we've been gifted the infrastructure by good fortune, and we already have a power line crossing the site, already have good road access. Just coincidentally, the World Bank and EBRD and all those people financed a huge motorway and rail link between Western Europe and East Coast China that happens to go through our main town, just 70 kilometers away from us. So we have all the reasons for a low capex project, as well as the characteristics of the project itself. So really, this is an extraordinary good opportunity that Mick has recognised, and together I think we'll make a success of it.
Well, you've obviously realised what a good project is for some time, and certainly I know my research team, myself at VSA Capital, have been big fans, because I mean, the great thing about your project, not only is it very low cost, but of course you have a lot of other credits in there, other products like uranium. And I mean, you know, you have to be careful what you forecast, Nick, but I mean, I know our view is that potentially your vanadium cost of production comes down to almost zero when you look at those credits.
Negative.
Well,
in our competent persons report and our own studies indicate that the costs of production are more than paid for by the byproducts.
I mean, that really is extraordinary.
Typical byproduct accounting, where you offset those costs against those revenues against your costs, it means that we have a negative cost of production of the vanadium, which is extraordinary. And if you think that that's being unreasonable and you treat them as co-products, so you apportion the costs over all the products, then we get to a very, very low cost of production of vanadium of just $1.55 a pound, which is less than half of the best of the rest.
Yeah, I mean, I think most people are doing about $3 are doing very well, and some are much higher than that. And presumably, you know, the idea is that most of your offtake would head towards China, is it? So again, pretty close, easy shipping.
Yes. I mean, offtake shouldn't be a problem. It's a small market and it's growing strongly, growing for the reasons that you're familiar with. The traditional use is growing strongly, and there's the new battery electrolyte use. Now, very interestingly, Blue Vision Resources is planning, well, its reason for being is to be involved in battery metals, and we have part of this deal is that we will offer 25% of our production at market prices to their to them as electrolyte.
And you have recently announced, haven't you, that you've actually are able now to make the product that's required for this electrolyte. So you have that ability, don't you?
We announced that a few months back. Yes, we have that technical capability, and actually, it's not really. If you start off with the right sort of material, it's not very difficult. But we'll now have a partner to work with to be credible in that sphere, and so that will be very good for us to have that relationship. Perhaps I ought to just explain why our costs are so low and why we're so attractive as a project. I mean, quite apart from the lack of costs of infrastructure development, the main advantage of our deposit is the type of ore, because nearly all the world's vanadium comes in one way or another from a material called magnetite, which often contains low values of vanadium, which are produced either as a byproduct from steel making or as the primary product in a small number of operations around the world. But the problem with magnetite is that to liberate the vanadium, you need to go through an expensive process. As a primary production, you can't just use acid the way most operations in various metals. You simply dissolve the metals that you want in the right sort of acid and then recover it from the acid solutions. But you can't do that with magnetite, so because the iron ore grabs all the acid. So what they have to do is they have to roast. And because it's very low grade to start with, I mean, often as low as 0.5%, sometimes just over 1%, they heating up the Earth's crust to 1100 degrees to liberate this vanadium is very expensive. So they concentrate it first, but they still only have, even after they've concentrated it, they only get it up to typically 2.5, maximum 3%. in the concentrate, and then they heat that up to 1100 degrees. So they have huge costs for a concentrator and then a roaster to roast this material. And that means the infrastructure to bring oodles of power in. By the way, it involves a huge amount of fossil fuel burning, so it doesn't help the environment. And we don't have any of that. Ours is a completely different type of deposit, almost unique. Ours is not magnetite, and we can do the simple job, just dissolve the vanadium in acid and recover it in a fairly standard way. And that's why we have this low infrastructure cost, low capital cost, compared with all the other vanadium projects in the world.
And it is a very large area you've got, isn't it? I mean, the ability to, the life of mine or whatever will be very long, because you could expand what you've got, even, and you've already got a large area. So
the ore body is, for practical purposes, limitless. We've got 5 ore bodies. We've only actually properly explored the first, and the first is already bigger than the resources and reserves of all the other projects around the world. And we've got another 4 ore bodies, some of which are much bigger. So it's a very, very large deposit, and that's just what's been discovered from surface. All those ore bodies outcrop to surface. So there's a reasonable expectation that 50 years from now we'll be exploring and finding an awful lot more.
I mean, it's interesting because people have said to me, Andrew, you've at VSA Capital have got an NPV of £1.71. Surely that's ludicrous, because the price had been trading at 8p, and we're trying to explain to people that actually it isn't ludicrous. That is a genuine NPV. In fact, I know other firms are validating it as well, and I think you would agree with it. It's just that people haven't really looked at you, and people are always suspicious about a mine that isn't in production, because will they get the money to get into production? Now you've got the money and you've got Sir Mick Davis, which means probably other people will also be attracted. Actually, although we're not going to get there straight away, I suspect you never quite make your MPV. £1.71 is not a ludicrous price, and of course that MPV could continue to increase. So it is incredibly exciting. Let's just pick up on one thing though, because you are, as you say, you will become the world's lowest cost producer of vanadium. I have no question about that. But you talked a little bit about the vanadium price as well. The vanadium price has historically been a little bit volatile. Recently, it's been very stable. We have had a slightly strange arbitrage between the Chinese price and the European price. They've now narrowed and caught up to each other. How do you see the vanadium price, just sort of in the next 6 months, should we say short term, but also longer term over a sort of a 5-year view, which you'll be using in your planning?
Well, short term is always very difficult to forecast, but the only sensible forecast I've seen shows a deficit from China. China has always overproduced and exported typically, and that's kept the European and US prices relatively low. The forecasts I've seen show that moving into deficit, which means that there should be a good strong run. And this deficit, moreover, is only similar order of magnitude to the deficit that caused the spike to nearly $30 in the tail end of 2018. Having said that, the statistics are not so reliable, and there's some uncertainty, but this year it's gone up from around $5 to $8, over $8 already. And I would not be surprised if there wasn't a lot more to come. The 5-year term, there is a deficit of a forecast deficit of vanadium because of batteries and because of microalloying, the advantages of just in its standard use for adding to steel to improve the strength. There is an obvious need for more vanadium. That's why vanadium is of interest to people. And it's very interesting to see that the price of vanadium was really based on byproduct production. 70% to this day still comes as byproduct production. And or co-product, I think is probably better called, from people who are making steel out of magnetite. But the incentivization price, in other words, the price that the industry needs to incentivize the building of another vanadium primary producer to meet this extra demand from batteries and from microalloying, which is growing. is probably at least $10 or more. Absent us, I have to say that we are rather different. We probably only need a price of $2 or $3 to justify our construction and development. But to the extent that we don't dominate and overproduce, that need for $10 plus to justify the building of another primary vanadium producer indicates that really the price has to be that. Nobody's going to invest in a new mine except us until the investors are looking at, the bankers are looking at a stable anticipated price of plus $10 plus. Some of them a lot more. So that tells you that the clearing price in future is probably likely to be $10 plus. So I think the 5-year outlook is $10 plus. It will have the same volatility, ups and downs. The volatility, by the way, is caused because it's a very small market and it's a very specialized market. You can't really stock hold in it because there isn't a generic product that you can stock hold and then feed out to the market. It's all done producer direct to customer because every customer needs a specific type of material that they get used to. So I think the 5-year outlook is $10 plus on average. The short-term outlook could be very good. There again, no guarantees because the statistics just don't support it. But because in microalloying, typically you're putting $1 kilogram or 2 kilograms of vanadium per ton of steel. It means that steel producers will carry on buying it even when the price goes to $30. There will be some substitution, but that's why the price goes so high. There's no easy way of avoiding vanadium, and it's a very small part of the finished cost of those types of steel. So that's why it's very volatile, and it will continue to be so. And every project that comes off the block has to be able to withstand long periods of low prices and will make huge amounts of money when the prices are high. That's the nature of the business we're in.
Well, Nick, I know you've actually just flown back from Kazakhstan and being out there sorting everything out. So I really appreciate your time. We'll wrap it up there because you need to get out there and start building this mine and bringing us to success. But I think you've made it very clear that, 25p, which is roughly where the price has moved to today, is just the starting point, because that's the first option. 78p rather is probably the next leg up that we would be looking for as a sort of a target price short term. Which ties in with those options that Blue Vision has taken. But yeah, with an NPV of £1.71 that we're forecasting and an upside from there, it looks as though the journey for the next years is going to be incredibly exciting. And I think we're going to be talking again, Nick, because this is something that investors just can't ignore at the moment. So I really appreciate your time. I know also you've got quite a lot of meetings coming up with Sir Mick Davis. We're doing some of them at VSA Capital. We are your joint broker. Very excited to be so, by the way. And look, it's a very exciting story, and thank you for your time, Nick.
It's a pleasure. We'll be talking again soon, I'm sure.
Thank you.
Bye-bye.